Hi, this is Charlotte Center for Legal Advocacy. My name is Saray Finley. I am an attorney in the North Carolina Low Income Taxpayer Clinic. Thank you for everyone who is watching so far. We will start the presentation in approximately 2 to 3 minutes, as this presentation is live, in person, at 5535 Albemarle Road, and on Facebook Live. So again, if you can bear with us as we wait for a few more people to join online and in person. Thank you. And again, this is Charlotte Center for Legal Advocacy. The presentation on self-employment basics will start in approximately 2 minutes. Thank you. Thank you for everyone who has joined us in person and online. We will start the presentation. This is our community winter series, Tax Talks, where today is the first of the English presentations on self-employment basics. Please note the presentation is for informational purposes only. It is not meant to provide legal or tax advice specific to the facts of your situation. And again, this is the first of our winter community tax talks. We are hosting 2 other live in-person presentations on December the 5th and January 16th. The December 5th tax talk will focus on reminders for tax season, and in January the tax topic is tax topics for immigrants. All the presentations are also available in Spanish the day before. So the Spanish presentation for reminders for tax season will be December 4th on Facebook Live only, and the tax topics for immigrants in Spanish will be available on Facebook Live only January 15th at 6 p.m. The North Carolina Low Income Taxpayer Clinic provides low-income North Carolina taxpayers with free tax representation in federal and state tax controversies, and we educate taxpayers about their rights and responsibilities as U.S. taxpayers. Our attorneys, which I am one, are dedicated to helping taxpayers understand and manage their tax issues regardless of language barriers. The Tax Clinic is part of Charlotte Center for Legal Advocacy, a nonprofit law firm located here in Charlotte, dedicated to pursuing justice for those in need. The types of cases we work are collection, which includes offer and compromises, installment agreements, another way for saying payment plans, currently not collectible status. That's when a taxpayer is having a financial hardship and they cannot afford to pay the IRS. Examinations, if you receive a letter from the IRS, even if it was several years ago, and the IRS audited your tax return for tax credits that you claim, the IRS sent you a letter stating that you do not report all of your income on a tax return. That's what we mean when we say examinations. Tax credits, innocent and injured spouse. Injured spouse is when you file jointly with your spouse and your taxes are offset for a spouse separate liability. That can be separate tax liability, child support, veterans, student loans. So again, injured spouse is when you file a married filing joint tax return and your refund is offset for your other spouse's debt that does not belong to you. So you can try to get your portion of the refund refunded by filing an injured spouse claim. Appeals, liens, levies, tax court litigation, but all this information is available on our website. So we'll start. What is self-employment? According to the IRS, a person is self-employed if any of the following apply. The taxpayer works in a trade or business as a sole proprietor or an independent contractor with the intention of making profit. So I put the intention of making profit because sometimes if you, I don't know, if you crochet or something like that and you make footies or blankets for families and friends and it's just something that you do, that may be considered a hobby. So you have to set out with the intent to make money because there is a difference between having a hobby and being self-employed. You are a member of a partnership that carries on a trade or business, a partnership, LLC, LLP, things such as that, or otherwise you are in business for yourself. You are your own boss. A sole proprietor is someone who owns a business by themselves, and that can be like a single member LLC. If you set up an LLC, but you are the only member of it, it's not another person, that is considered single member. So for IRS purpose, you are treated as if you are self-employed. And so you will file the same tax return as someone who was a Lyft driver with you. And these are examples of self-employment that we see most often in our shop or in our firm. And I put selling items or products online to make a profit. If you're selling things on Etsy, you're selling plants, you're making items for the purpose of, again, making a profit. You resell things on eBay, so that can be considered self-employment. Again, if your intention is to make a profit. If you're purchasing things and just to resell it, even if you're going to Goodwill and you're reselling it online, that may be considered self-employment. Am I self-employed? If you are a business owner or a contractor who provides services to other businesses, then you are generally self-employed. What do you mean by providing services to another? People who may clean houses, they may clean buildings. You're providing a service to someone else. We've had clients who did, what's that called, car wash, and they worked with a company who had a fleet, and they were the only person who washed the cars of that company. And that was considered self-employment. They were their own business. The IRS considers various facts regarding the degree of control and independence when it comes to determining if someone is self-employed or an employee. There are three categories that the IRS looks at, and they are behavioral. Does the company control or have the right to control what you do and how you do the job? If I am a house cleaner, and I would use the individual who used to clean cars. The employer just said, the company just told the client what time they had to be there and how many cars they were going to wash. You didn't tell them how you had to wash the cars, what products that you had to, the client had to provide. The client controlled all of that. Finances are the business aspect of your job controlled by the payer. These include things such as you're paid, whether expenses are reimbursed, who provides tools or supplies. Again, I'm talking about our client who washed cars. He provided his own tools. He purchased them. And again, he made up the amount that he was going to charge per car based on the type and model of the vehicle. The type of relationship. Is there a written contract or an employee type benefits? Will the relationship continue, and is the work performed the key aspect of the payer's business? That part, so I don't know what type of company the place was. I don't remember. But when it said the type of relationship, they had a written contract that if he, washed the car he was responsible for washing cars so many days a month. And how often, and for a period of time. I think the contract would usually go on for 3 months, and the payer would try to figure out to make sure that they had the money to pay him. And the work performed key aspect. The payer, the company that he performed the job for, the key aspect of their business was not car washing. So that's what that means. washing cars for a company because they have a fleet, and say for instance it's a HVAC company, the main aspect of that company is HVAC, not car wash. So that's what that means. Am I self-employed? In other words, so more key layman terms, you determine how the job is done. You control the hours you work. You may control where the work is performed. You are paid only if you work. You pay for your own expenses to carry out the job. And when I say you are only paid for the work that you do, it's not like you can take a sick day. There are no sick days usually when you are self-employed. If you don't work, you don't get paid. Like me, I'm an employee. If I don't work, I use sick time. If I have it. You pay for your own expenses again. You are paid for providing a service. This could be a flat fee or based on the time it takes to complete the job. If I were to work outside of here as self-employment and I was helping someone with their taxes, it's different than what the work that we do here. That may be considered self-employed because I control how much I charge. I can control how the job is done, when the job is done, and I will only get paid if I actually have clients outside of this organization. You are paid in cash, check, or payment apps. Those are huge factors because I work here. One of the things Charlotte Center for Legal Advocacy is not going to do is pay me in cash. They are not going to pay me by app, and they pay me by check, but it's a different type of check. But when I say check, I just usually meant like a check from the business or a personal check that someone can pay. But more than likely now, most of our clients, most taxpayers are paid who are self-employed cash or via payment apps. Zelle, Cash App, PayPal, Venmo, there are a variety of out there. And if you are being paid by those ways, please keep a record of your transactions. I'm going to talk about that a little later about business records. The payer does not withhold taxes. That's another clue. If you are self-employed, the payer is not withholding taxes from your pay. So that is a huge one. There are also instances when we've had clients, it started off as an employee relationship. So initially, the employer controlled everything. They completed an application, they interviewed, got the job. The employer told them where to be, how to do the job. Taxes were being taken out. And then sometime 7 months into the employment, their employer started paying them via cash or via checks, but taxes were no longer withheld. But nothing about their job changed. So to be honest, there are some times where your employer may try to treat you as an independent contractor, but you're actually an employee. Or there may be times where you started off as an employee, but if the employer is having some payroll issues, they may stop trying to withhold taxes. That is a problem. That's very problematic. Contact us if you are in that situation. We have seen it more frequently. Home health companies is where we've had experience in our firm of assisting taxpayers where the employer stopped withholding taxes. So the factors from the previous page are not the only factors, the behavioral, financial. It's a lot of factors that the IRS takes into consideration. And if you are working for someone, you're like, they are treating me as an independent contractor, but I think I should be considered an employee, the IRS has a form for that. This is an SSA form. I think it's about 4 or 5 pages. You can complete the form and send it to the IRS, and the IRS will make a determination. They may contact the employer, but based on the facts and circumstances that you provide in the letter, the IRS will let you know if you should be considered an employee or an independent contractor. And at any time, for those who are live, it's okay if you want to ask questions. Yes, sir.
Is that anonymous when you submit that form?
And I said, if I'm not mistaken, we can have someone look it up for you. We're going to have Ms. Carter look it up. But I want to say they can contact the employer because oftentimes they're just going based off what the taxpayer says, and so they have to be able to say, oh, is this true or not? But I'm going to have Ms. Carter now give you an actual answer before we leave here. The SSA, please. Okay, I am self-employed now. What? You are responsible to accurately report your gross self-employment income and expenses. Gross self-employment is the money that you make prior to expenses. After expenses, it is called net self-employment income. Self-employment income and expenses are reported on a Schedule C, 1040 Schedule C. you can only claim expenses on the Schedule C related to the self-employment. So, I am a tax attorney, and if I decided to work, if I have a little small side job of helping taxpayers who don't qualify for our services here, and I'm assisting, taxpayers who make a lot more money on the side, this is my side hustle, this is my side job, and I have expenses for that. I have my own personal laptop, I go out and buy paper, I do all these things. So when I file my tax return, I'm going to report my W-2 income, and I will also have to file a Schedule C for my side job. But the only expenses I can claim for that side job are the expenses related to the side job. Even though I may work from home for this job, the internet expenses that I may have to pay, I cannot claim all of my internet expenses on my self-employment income, because I don't use the internet. Is not only for self-employment. So I would have to prorate. The same thing with Lyft drivers. I would say rideshare drivers. If you have a cell phone and that's your only cell phone, but you don't drive 24/7 all day, every day. So you have to try to figure out what percentage of your phone is used for your business when you are claiming expenses. Opposed to, now if you just have a business phone and you only use that phone for your job, then you can claim all the expenses related to that job. But when that is not the case, you can own, and a lot of times it's math. When I say prorate, if my mom has Boost Mobile, her bill is $50 every month. No ifs, ands, and buts about it. So if my mom had a side job, I would have to figure out, well, she uses this phone 30% of the time for her self-employment income. I'm going to, actually 0.30 times 5, and that's what I would come up with.
So, found out the information about the SSA. It does say the IRS can share any of the information on the form with the other party. So it doesn't look like it's mine.
Okay, so prior to this, someone in person asked if you submit an SSA, because you believe your employer is misclassifying you, is what it's called, and they're misclassifying you as an independent contractor or employee, and you complete an SSA and return it to the IRS may contact your employer or the business. Okay. You, for W-2, one of the reasons how to know, okay, I'm self-employed, you will not receive a W-2 for self-employment income. You may receive a 1099 NEC, and that's a new form. It's only a couple of years old. A 1099K. A 1099K is provided, it's a Cash App, PayPal. I'm going to say Square, because Square actually owns Cash App. But if you are being paid when you go to, well, now everybody has little Square, the little card things, and it's Square. A 1099K from Square. Those are what you may get. Some people may still get a 1099 miscellaneous, but you should not if you are self-employed. So primary forms that you may receive are a 1099 NEC or a 1099K. Now, there are some, so if I am doing work on the side, I'm helping other taxpayers, I'm not going to receive a 1099 NEC. That's just like the girl does my hair. I do not give her 1099 at the beginning of the year for all the money that I paid her for doing my hair. I just pay her via Cash App, and that's how she likes to get paid. But if I am doing work for a company, and I'm doing this company's taxes, maybe that company may issue me a 1099 NEC. Because usually they want to be able to claim the expense on their tax return for paying me. So my client who was doing work for the fleet operator, the person that, some company who was washing their cars, they issued him a 1099 because that was a company. So usually when you're doing work for another company, you may be issued a 1099 NEC. And again, a 1099K is coming from it's called payment card and third-party network transactions. So that's the PayPal, that's the Cash Apps and things such as that. But you can receive a 1099K even though you are not self-employed. And that's when you have to say, hey, IRS, this was not something issued for self-employment. I'm minimizing how to actually do that, but there are times someone may, if you're doing a lot of Cash App transactions for whatever reason, then, but if it's not for self-employment, because this is how you send money to your child in college, then that's a different story. If you do not receive a 1099 NEC or a 1099K, you are still responsible for reporting your self-employment income you receive. So, that's the cash that I get. Even though I don't get a 1099 MEC, it doesn't mean I don't have to report the income that I made from my self-employment. I am responsible for doing that. Yes, sir.
Question. I'm just gonna use me as an example. So does the 1099, do you have to, like, how do you get someone a 1099? Does it go through the IRS? Or can you just like print something out and it, like,
Both.
just-
So the question is if I need to issue someone else a 1099, because I'm a business.
Mhm.
You know, so I'm a barber and there's people who work in my shop and hey, you know, so yes, so the IRS has, you go to the IRS website and you can order the forms. You actually have a deadline. When you are the person issuing the 1099s, I want to say it's still January, you have like a deadline that you're supposed to give them to. So you get them, order them from the IRS website. They kind of want them electronically now. If you use a tax prep software, I'm mostly familiar with one tax prep software. We can talk about it after. I can tell you, depending on which software of theirs you purchase, like their self-employment, you can actually issue the 1099s through their website, and they will actually send it to the IRS on your behalf, and probably send them to your independent contractors that you want them to go to. But the IRS says if you pay someone more than $600, you're supposed to issue them a 1099.
So my situation is, so I have salon suites, and they don't work for me. They're really independent contractors, but they lease from me. And I had a tenant ask me for records of how much she has paid, but I mean she paid me.
That's different.
Okay, so how would that work if she?
That's your receipts.
I just
So-
tell her. Okay.
Okay, no, so actually that's a good question because I'm about to talk about business records, keeping
Okay.
business records. So the question was, hey, I own a salon suite. Tenants just paid me the lease. Like they rent out the space and they pay me the amount that they're supposed to owe me. And someone asked for proof of all the payments that they paid me. Because there's a couple of reasons. So we're on business records. So as the business owner, because both of you are business owners, you know, so you're responsible for keeping a record of the payments you receive because that's your income. And technically, this other business, the person who's renting from you, should keep receipts or how they're paying you. You know, one of the things I would suggest is you provide receipts as well whenever they pay you, so that way you'll have a record of your business expense. Because if your your tax return is ever audited, you have proof to provide to the IRS that, hey, you know, not only, I'm just not going to write IRS, this is how much money I received in lease. This is the proof, because sometimes that's not sufficient. We have had quite a few taxpayers who are audited, who earn self-employment income, and the income may not be the audit. It may be some tax credits on the actual return, but I've had taxpayers who are audited for the income. The IRS wanted them to prove the income, or the IRS wanted them to prove their expenses. So the best way to do that is keep a record, you know, invoices. I've had a client who was a translator. He was a translator. This man had a hustle. He was a translator and he took pictures. He traveled around taking pictures of families so they can send to different countries and stuff. And so he kept receipts. He had like an appointment book that he made. Like he had all this paperwork, but that was his proof, and that's how he was able to keep his record. So, you know, keep bank records, invoices, receipts, record payments as you receive them. The IRS actually you're supposed to, it's called contemporaneous. You know, if you have a log, I could say a log book, but if you have a log book, you know, this is how much such and such paid me, because you can use that log book as proof, especially if it's kept contemporaneous. In other words, if this is something I'm keeping and I'm using all the time. The taxpayer who he was audited because of his income. The self-employed person, he didn't keep anything. The only thing he had was a calendar. He had a 12-month calendar, and on there he showed, because he washed cars for more than one company. In his calendar, he would put, this is, you know, on this date I went here, oh, my appointment time, I'm supposed to be there at 9 o'clock. So, and then he had to get letters from his companies. It's easier to get companies to send you a letter than it is an individual. The company said, yes, we paid him for, you know, this amount in tax year 2020. I don't remember what year it was. And that's what they provided him, but we also had a calendar that he kept. He kept a contemporaneous calendar. Unfortunately, the calendar didn't say what his income was that he made from washing the cars, but that's how he kept his appointments. Does that answer your question?
Yes.
So for her, you could, whatever you use to, keep receipts of what, or how you manage how much they paid you. That's,
Yeah, she was using it for tax purposes.
Yeah.
But everything I do is online transactions, so it's automatic.
yeah, it's right there.
Yeah.
Yes,
Another
sir.
question. So if I'm doing business with another business and they ask me to provide them a W-9,
Mhm.
where does the W-9 come in with all of this?
Okay, so the business is asking for a W-9 so they can issue you a 1099.
Got it, okay.
Yeah. So that way they can pay you, and so I'm used this gentleman who owns the salon suites, because when he goes to file his tax return, he wants to be able to say, oh, I had to pay for somebody to come clean the space so that's an expense. I want to claim the utilities. So he wants to be able to claim things on his tax return. And so if he's paying a company who comes out every other day to clean, so we have cleaners who come every day to clean our building. We need a W-9 from that company, so that way we can issue them a 1099 or something like that at the end of the year. But that's why they usually ask you for a W-9, so that way they can issue you a 1099.
So if I am paying independent contractors, I should get a W-9 from each one?
You should definitely have their social security number. If you're paying independent contractors and you plan on providing them a 1099 because you paid them more than $600.
Got it.
So I just want to say, so I have someone come clean my house every month. I don't have to give her nothing. That is her business. I'm not a business. I'm just somebody who don't want to clean their own house. So I don't have to issue her anything, at the end of the year or next year about the number, how much money I paid her. Because there's nothing I can't do. It's not an expense that I can claim on anything. Yes, ma'am.
So in regards, and maybe this is a conversation for, I'm just thinking about expenses in regards to like what can be claimed and what can't be claimed, but it's something.
I'm gonna have some resources for that.
Yeah,
for you.
so for me in particular, like, owning a mobile bar business, having a nanny, and then coming in to babysit, doing a set amount of hours, and I pay her, obviously, as a service for me while I'm going to work.
Okay.
Is that something that I can write off?
Okay, so the question was, I am self-employed and I have childcare. I'm, in home, but I pay someone to watch my children. Can I write that off? No. So I'm just, not as a business expense.
Right.
Because it's not a business expense, that's a personal expense.
Yeah, okay.
Like the IRS gives you childcare,
Deduction.
dependent childcare
Right.
deductions, whatever, credits. But it's not a business expense because it's not related to your business.
Got it.
Okay, does that answer your question? No. So mileage logs, if you are driving, and I'll use rideshare drivers as an example. Usually the rideshare drivers are only counting the miles where you had a customer in your car. But if you're driving around trying to wait for someone, you may be able to claim, and I'm saying you may be able to claim just those miles. So again, keeping a mileage log. Oh, Spark drivers, is that what it's called? Spark, like people do Walmart and things such as that. Please track your miles, because in our experience, they only provide so much information, and sometimes this is not inclusive of all your expenses that you may have. Statements from payment apps. I know I get a statement every month from Cash App. I never read it because I'm not doing business on Cash App, but look at your statements. If you get a statement from Square, look at them just to make sure that they're accurate as well, because it's a lot more difficult to say, hey, this company issued me a 1099 and it's incorrect. Yes, I'm self-employed. Yes, I make money, but this is a lot more than what I actually make. And let's see if this will funny. I'm sorry, it's not playing out loud. Okay. I can't even try to see on my thing.
The volume button, and then all the way up.
See, yeah, well, this is about as much as one gets. What's that? Let's see. Okay, it's all right, it's not playing. But there's a video from the IRS on the IRS YouTube page. The IRS does have a YouTube page that you can find this, and it's just small business. Except for small business. One of the things I want you to know, so a lot of times people go, well, I don't have a business. If you are self-employed, it's considered your business. And I know, I'm a rideshare driver, it's not a business. It's just side job. It's considered a business for tax purposes. I understand personally you may claim to, I would say, marketing.
Missed this when I walked away. So as far as, like, I don't have another source of income when it comes to 9 to 5. I don't have a W-2 any longer. Am I just filing a Schedule C? Like, what am I filing solely for?
Schedule C.
Schedule C, got it.
So you're gonna do a 1040, but your self-employment income is reported on the Schedule C, which is a part of the 1040.
Got it.
So it's actually called a 1040 Schedule C. Yes. So I'm sorry, just one second. The question was, my only income is my self-employment. Where is that reported on the tax return? And the self-employment income is reported on the schedules, a 1040 Schedule C.
Got it.
So if you file it, if you go to a tax preparer, make sure that is included in your tax return before it's filed. Yes, sir.
What percentage of your income should you be like claiming for yourself aside from the business, like paying yourself?
So the question was, what percentage of your money should you be paying yourself? This is, well, you can, as a self-employed, issue yourself a W-2, but when you're self-employed, the IRS is basically all yours outside of expenses. So it's up to you, because when you're self-employed, if you have health insurance, you can still get a retirement account. It's a simple account. There's different, there's some different information, but technically all the net income is yours that you make. So when I'm saying net, it's yours. So what you choose to do with, so that is paying yourself.
Because I've heard some things like whenever you go to apply, let's just say for a loan or something, you want to be able to show like personal income aside from the business. But I haven't had that experience. I've taken out a few loans with my business tax information.
Right.
And
So it's your business.
Yeah. Okay. Yeah. So it's fine.
Yes. So the question was, in case you have to do it alone and things such as that. Well, if you have self-employment income, as far as they're concerned, that is your income. That's different if you have a partnership and there's more than one member. So in other words, see, are you and your person is, because technically they're single member LLCs and their tax issues, because that is a 1040 Schedule C, but we do not assist with 1065s and things such as that, and K1s. So actually it's a 1065 K1. Tracking business records, just going to reiterate, use accounting software if you have to. Record business income and expenses regularly. Use apps, for example, something like QuickBooks. Keep records of any refunds received. I had a client who had PayPal, and she sold things on eBay, and sometimes she had to refund money. eBay kept that information, but if that's not your job, make sure you're reporting refunds, because that's information that can go on the tax return. That's part of your gross, but that is an expense that you had because you had to return that money. Your gross income and submits the money to the IRS. However, when you are self-employed, income, no taxes are withheld. You are responsible for paying your own taxes. The taxes are income taxes, taxes on the amount of money that you make, and your Medicare or Social Security tax. If you are a W-2, that's your FICA. You look in boxes 4 and 6, you have your Social Security, income that you made for Social Security purposes and how much taxes that you paid. But when you are self-employed, you are responsible for paying your own Social Security and Medicare tax. What's the difference? Income tax, federal and state taxes that are withheld from pay to cover an amount one may owe on their tax return when you file it. So my employer withholds taxes, and they withhold an amount based on what I put on my W-4. And so, what I put on my W-4, that's how they can, and what my income is, that's how they withhold taxes. And hopefully it's enough so that way when I file my tax return next year, I won't owe the IRS. I've not always been that lucky. But that is a me issue, not an employer issue. Self-employment taxes are federal taxes comprised of Social Security tax and Medicare tax. I didn't include state taxes, but you have to pay state taxes on your income. You can deduct the employer equivalent portion of your self-employment tax. So this will be available online. So this part, when it's self-employment taxes, you have to pay them. You are responsible for them. You do get a deduction from your self-employment tax, half on the Medicare and Social Security though, when you are self-employed. Taxes must be paid as you earn or receive income during the year. As an employee, you had taxes withheld. Your employer was responsible for sending that money to the IRS. So when I said I had a client who worked home health, and she was an employee, and they started treating her as an independent contractor, that's because the employee didn't have the money to send the taxes to the IRS. And again, that's a separate issue. That was an employer problem. An employee who pays income and payroll taxes each pay period via their employer. Persons who are self-employed too often wait until they file their taxes to pay the amount of taxes on their income. However, waiting to pay taxes until you file a tax return may lead to a huge tax liability and an underpayment penalty. So, if I'm self-employed, I have made $65,000 this year, and I have not submitted any taxes to the IRS, again, you are responsible for the income taxes, and I'm just gonna say you made $60,000 net. I'm not gonna talk about your, we're just gonna say net. So now, you haven't had, no taxes have been withheld. And you're gonna look at, they're gonna prepare your tax return, and you're like, oh, who got that? I understand, no one has it, you may or may not, and you're gonna have a huge tax bill, and you may have a penalty because you didn't send money to the IRS prior to. And I get it, not everyone knows this. Not everyone who is self-employed knows this, I get it. But I'm telling this, why we're having this. You are responsible for paying your taxes, and I'm gonna talk about how you can do that. Advice, do not try to avoid owing taxes by erroneously increasing business expenses to decrease your self-employment income. So in other words, I made $60,000 in gross self-employment income, and I'm telling you, if you hadn't paid taxes, you may have a large tax liability. So what sometimes people will go, well, I'm gonna claim all these expenses on this income. So, somehow, some way, you made $60,000 gross, but you had $55,000 in expenses.
That is a man.
So, and you're doing that intentionally to try to avoid having a huge tax liability. I'm going to talk about later, but that can actually have adverse consequences. And it's unintended consequences, sorry. You can lead to the loss of tax credits, because if you have dependents and you rely on the earned income credit, the earned income credit is based off your earned income. It can also affect your Social Security in the future. It can affect your retirement earnings. So our retirement earnings are based on the amount of money that we make. But if you had $55,000 of expenses, you're telling the IRS that you really only made $5,000. So that would be your Social Security. That may be your Social Security earnings for that year, $5,000. And so retirement is going to be based on you only earning $5,000 for so many years, if that's how you report it. A way self-employed persons can, you can pay your taxes throughout the year by making quarterly estimated tax payments. Estimated taxes is a method used to pay tax or income that is not subject to withholding. As you recall, self-employed individuals do not have taxes withheld, so it is up to you. How do you know the amount of estimated taxes? It's not simple. It is a formula. Review prior year tax returns, especially if you had self-employment tax the prior year and your income is about the same, because that will give you a good idea of how much your self-employment tax, your estimated tax payments will be for the next year. Depending on which tax, if you prepare your own tax return, depending upon which software you use, they usually will print out, it's called 1040B vouchers. And those vouchers are for the purpose of you paying quarterly tax payments the following year. Your tax will include a Schedule SC. You can also look at your tax return. The Schedule SC will have your estimated tax payments on there. And if this is your first year, you've never done it before, or you're making more money or making less money, when I say making less or more regarding self-employment, the IRS Form 1040-ES you can complete. And it's only a couple of pages on the form that you actually have to complete, but there's information that you need from the prior year. You really have to know a little bit more about your business, what your net income would be to accurately complete the form. You can also look at IRS Publication 505, 505, Tax Withholdings and Estimated Tax. And that's where the 1040 is. And someone said that's a primary source of income, self-employment, so the making quarterly estimated tax payments is very important. Do I need to pay estimated taxes in a lump sum? No, you don't have to make the estimated tax payments in a lump sum. As I said, they're quarterly, and those dates are April 15th, June 15th, September 15th, and January 15th of the following year.
Will there be some information that we can have for this, or is it, where can we find it?
keep me coming. Okay, the question was where your information will be available, because we're doing Facebook Live at the same time. So for Facebook Live, the PDF of the presentation will be online. Okay. But the answer to that is yes. Am I required to pay estimated taxes? Yes. If you expect to owe $1,000 or more in taxes when you file a tax return, you are required to pay estimated taxes. You may also be assessed an underpayment penalty. An underpayment penalty is when you have not paid enough taxes. You can have an underpayment penalty just from W-2 income, but we see it more often in persons who are self-employed. And even if you make quarterly estimated tax payments, but if your quarterly estimated tax payments were not enough or insufficient, very insufficient to cover the taxes that are owed on the tax return, the IRS may assess you a penalty, even if you are due a refund. Okay, what will happen if I do not make quarterly estimated tax payments? You may have to pay an underpayment penalty, like I said before. You may owe the IRS when you file your tax return. Failure to pay quarterly estimated taxes can limit your IRS collection options if you owe taxes for prior tax years. And we are almost finished, but I just want to hit on that. So oftentimes people come to us because they have large tax bills or they owe taxes for prior years, and there's a variety of collection options that are available to some taxpayers. And sometimes we may say, oh, you know what, you may benefit from doing an offer in compromise. That's a way of settling a tax debt for a lesser amount. Now, everyone qualifies for an offer in compromise. It is a lot more detailed than what I am oversimplifying it. But you cannot, if you are self-employed, we cannot file an offer in compromise on your behalf if you are not making quarterly estimated tax payments, because that means you are out of compliance with the IRS. Okay, self-employment and Social Security. The Social Security Administration, again, uses information from your Schedule SC, which is part of your tax return when you are self-employed, to figure your future Social Security benefits. The Schedule SC lists your net self-employment income, so your net earnings for Social Security are based on net self-employment. So again, this is why I say, do not try to overstate your expenses, because if you're audited by the IRS and you cannot prove all of those expenses, they will remove the expenses that you deducted but cannot prove to the IRS that you actually paid. And also do not overstate your expenses for the purpose of trying to lower your tax liability, because again, it can have unintended consequences when you are ready to retire. We have seen it happen more often than not. We have seen it in the tax unit, but we've seen it in our family support and healthcare, who assist individuals with Social Security because they are upset about the amount of Social Security they are receiving, and they were self-employed for like 20 or 30 years and did not file taxes. We have seen it in our office. So if your only income is self-employment, but you did not file a tax return, Social Security says you have 3 years, 3 months, and 15 days to file a return in order to get credit for the income that you made. So in other words, if I was self-employed, that was my only source of income. But even if I was self-employed and had W-2, and I made $10,000 in self-employment net, I want Social Security to know that my money was more than, because when I'm ready to retire, I want more money than a little bit. So, but if you do not file the tax return within a certain time frame, you would not get credit from Social Security for that year. Yeah, I see it right here. Wrap up. Boom, 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 see that? We are hosting, so again, quarterly, if you're self-employed, please, the most important thing is, track your income. Please know how much money you made. Please know how much your expenses were. If you go into a professional tax preparer, they're going to charge you when stuff is unorganized. If you're doing online, you still have to have an idea of how much your expenses were. You know, sometimes a tax preparer may just say, well, you just tell me what it is and I'll write that down. Okay, that's fine. Because, you know, they get paid regardless. They get paid for preparing your tax return. But they may not be there 2 years or 3 years or a year later when you're audited by the IRS because you don't have proof of your expenses. You know, the tax preparer is going to say, hey, I did what you told me to do. If you take your receipts and stuff, we know sometimes tax preparers want you to provide all that information. They want proof of the income, they want proof of the expenses, because they'll gather and organize all that stuff for you to prepare the tax return. Please get those items back. Do not leave them with the tax preparer. The next presentation in November is going to talk about how to choose a tax preparer, what to look for when you have a tax preparer, a PTA. that's what definitely your tax preparer should have, a PTN, and that is a number given to them by the IRS. But I always tell people scan proof of your expenses. You gotta take a picture of a receipt because receipts fade, especially if you're just going to the store. Sometimes, you know, you have accounts with certain companies so you can get your, you know, Costco, you can get receipts from 3 years ago. But sometimes you may not go to Costco. You just gotta take a picture and screenshot stuff because that is proof and that is sufficient. Again, December 5th, we will present on reminders for tax season, which include tax preparer. That will be helped by Ms. Carter. January 16th on tax topics for immigrants. Again, keep accurate and contemporaneous records. Timely file your tax returns. Overstating your business expenses to lower your taxes can impact your Social Security earnings. Make quarterly estimated taxes to avoid large tax liabilities when you file your tax return. I'm gonna repeat this. The more sophisticated your business, the more sophisticated your business record keeping should be. And utilize available resources. And these are some resources available here. The IRS publication 334 is an excellent. It's big, it's long. You can just download it. You don't have to print. A lot of the information I've talked about is available on the IRS's website. The IRS Small Business and Self-Employment Tax Center. You go to the IRS's website and just, you know, type in small biz, and it has a whole section that talks about self-employment taxes. It talks about everything related to self-employment. United Ways, My Free Tax Self-Employed Tax Guides. The Taxpayer Advocate is usually if you have tax problems. Free tax preparation. So we don't provide, we don't assist with current tax year. So next year, at the big tax filing season, there will be several places in Charlotte that even if you are self-employed, depending on the amount of income, you can go and get your taxes prepared for free. And those will be VITA sites. North Carolina has also participated in the IRS Direct File, and that is free for those who want to self-prepare their tax returns. But again, you can go to VITA sites. For persons who speak Spanish, we have VITA Latino will offer tax preparation in Spanish for Spanish-speaking taxpayers, and they will actually be here at our office 3 times, sometime in February, March, and April. I don't actually have the dates, but you can go to VITA Latino's website or social media. And if you need assistance with a tax matter because you've been audited by the IRS, all those beautiful, wonderful things that I said at the beginning that we assist with, you may contact us at 980-353-3530, or you can also go on our website and schedule an intake call with our paralegal, and he will call you back. And again, that way you can schedule a time that someone will contact you. Thank you.